So the S&P 500 is down almost 25% compared to its recent all-time high. And that is a pretty big market crash. In fact, compared to some of the other big crashes we've had in recent history, we are actually already in the number 9 spot of biggest bear market during the last 100 years. And it seems that this bear market might continue for a little while longer still. After all, the price of stocks really only depends on two things. First, earnings, and second, the price to earnings ratio. And over the last few months, we've seen a sharp decrease in PE ratio multiples of the S&P 500. And now we're trading at a price to earnings ratio of just 18. And now some very smart people are predicting that the next leg down, maybe the next 25%, might stem from a decrease in corporate earnings. A decrease in the general profitability of the US large caps. But I do want to slow myself and you guys down right here. I believe making macroeconomic bets and predictions is a fool's errand. If you want me to make a dedicated video talking about what I believe focusing on macroeconomics is a bad investment habit to get into, please do let me know down below. So this video will not predict where the stock market will go on the short term. I have no idea and your bet is most definitely better than mine. But I do want to lay out this. These are the companies I am actually purchasing for increasingly better prices for as long as the bear market continues. So here is what I am looking for. The companies that I am actually purchasing during this bear market all share a couple of very important traits. Traits that make these companies both a lucrative and a safe investment at the same time. Trait number 1, I'm currently only purchasing profitable companies. I would describe myself as a value investor. And during this bear market, it is more important than ever to remind ourselves what it actually means. Value investing means investing in value today. And value today means profitability today. So the main stocks I am purchasing are shares of companies that are hella profitable and will most likely become increasingly so. Profitable companies should allow us to get amazing returns on the long term while not even facing that much risk by investing in them. Super mega important trait number 2, no or close to no debt. I should really expand this point. I am only investing in companies which have hella clean balance sheets. I mean a huge cash position, no or close to no debt, very well managed inventory position, etc. And this is a trait that actually allows me to sleep at night. If companies have a clean balance sheet that minimizes the risk of investing in them. After all, it is really hard to go bankrupt if you don't have debt. Ultra super important trait number 3, the companies are actually cheap, like hella cheap. And this point, this might just be the most important trait thus far. Only investing in companies which are undeniably cheap based on a price to earnings, a price to free cash flow, and a price to book perspective. What would you rather own? A company trading at a price to earnings ratio of 100 or a company trading at a juicy price to earnings ratio of just 6.1? To be fair, both companies are on completely different growth trajectories, so they should be valued differently. And they are, which is good. But the one with a P ratio of 6.1 has significantly less risk attached to its valuation. Even if the company doesn't grow at all for a 10-year period, you will still most likely sell for a profit just because it is so cheap today. And the company with a P ratio of 100, well, the company does need to grow explosively for you to turn a profit. And if the company doesn't grow explosively, well, you could lose 50%, 75%, or even 100% of your investment. And trust me, companies will grow significantly less quickly during a global recession if and when that arrives. So that is why I only look for cheap companies today. It increases my potential return. After all, this way the company can both enjoy earnings growth as well as multiple expansion, but more importantly, it also limits my risk. So number 1, profitable companies only. 2, preferably no debt, and 3, hella cheap companies only. Of course, stating these requirements and actually finding companies which possess these traits is a completely different thing. I am describing a unicorn after all. We are literally looking for the perfect company to invest in, and those are really hard to find. But I did find 3 of these unicorns which might interest you. I believe these companies all possess those 3 very important traits. Number 1, Adcore. Extremely solid financials, an insane growth trajectory, and the company is trading for a P ratio of just 4. Hella cheap. Number 2, ASO or Academy Sports Plus Outdoors. Probably even better financials, a lot of potential growth drivers going forward, healthy share buybacks, and this company is trading for a P ratio of just 6.1. Lastly, UWMC. This company actually pays a freaking 11% dividend, which is insane, and is also just trading for a P ratio of 6. So those are the 3 companies I'm currently heavily buying. At this moment in time, combined, they make up roughly 15% of my portfolio, but I do want to get that number up over time. I love all 3 of these companies, and I will love them even more for even lower prices. So that is what I am doing during the bear market that we're currently in. Continuously buying these 3 amazing companies and keeping my eyes open for opportunities if and when they arise. But I haven't discussed the other part of my strategy yet. And this part is even more important than the buying. It is sitting on the shares I already own in Regeneron, Cortomic, ASTS, UWMC, Adcore, ASO, and of course my leveraged ETFs. I do believe the underlying companies of these stocks will continue growing even during a recession or a depression. Hence, I will continue holding, and I'll let the managers of these amazing companies do the hard work for me. The hard work of creating value for me. So my complete strategy is I will continue holding amazing companies going forward, and I will add to my positions for increasingly cheaper prices continuously. Now, what are you planning to do? Or what are you already doing during this bear market? Please do let me know down below. Now, thank you so much for watching. I love you all. Peace.